dollar cost averaging. I'm about to prove to you now it's stupid, it's silly, it was made up by YouTubers because it's easy to sell nonsense to people and prove to you it's rubbish. And I don't do it. What I do is I buy under value and I buy with conviction and I wait. I don't just keep buying every week dollar cost averaging because over the history of my life, I just might win. Well, of course you will win. Over life, over time, you'll win. But will you win as much as if you'd bought with conviction at the bottom? And yes, you can time the bottom. And I've done it many, many times. And I'll show you why dollar cost averaging is rubbish. So hopefully by now I've got you intrigued on this video. I'm making this during a live show. So you could share with me your thoughts in the comments or in the live chat if you're watching me live. So people always try to sell the story. We live in a world where doom and gloom sells much more than something that's good. It's just the way we are. Look at the news. The news is always who's blowing each other up, who's killing each other. Very rarely you'll hear of Auntie Doris crossing the street to save her little cat who ran up a tree and it was a nice little story. You don't get to hear about that. We like the bad news. We also like simple, stupid news because people are lemmings. They watch YouTube videos. I'm not a YouTuber. I simply broadcast on YouTube TV. I'm the World Piano Man. I've toured all around the world as the World Piano Man, and now I've built a TV studio to help people. I'm not here to sell videos. That's why this video that's being watched by you right now was made during a live show where I'm talking and helping real people live. It wasn't made in the comfort of my studio. Yeah, I am in the comfort of my studio. Off air, well, it's convenient and easy. I made it live. I'm here to deal and help people live, not sit here making videos and just push them out so I can make silly videos. I do it live. This is being made live. That's the real clock right there, the real time as I made it. So people on YouTube like to either tell you the world's going to come to an end, and one day it probably will, but it sells stories, makes them money on silly adverts. Or they'll tell you things like going to the moon, or they'll tell you get rich quick, or they'll tell you dollar cost average. Now, let me cover dollar cost average today and prove to you without any doubt whatsoever it's a complete load of rubbish. And before you continue watching this video, you're probably going to think, well, who are you? I want some clarification that you know what you're talking about. Well, I started 4 years ago. It's our 4th anniversary this Friday. I started with $5,000. I've never done options. I've never done shorts. I only own the S&P, but I buy with conviction. So how much money have I got today, 4 years down the line? Well, I've got $398,000 in my brokerage account and I got $38,000 in my main account. Let's call it $440,000. Nearly $500,000. Well, it's all right for you. You're on YouTube. You're making money from making silly videos. Nope. Wrong again. I started a year and a half ago after touring the world as the World Piano Man, where I earned $20,000, $30,000, $40,000, $50,000 in one night selling out a theatre. So I don't need to do this. I do it because I like helping people. I sat here for the first year and a half, earning absolutely nothing. Went for all my savings, built arguably, hopefully you'll agree, one of the best live streaming studios on YouTube, and committed to sitting here 12 hours a day, going live to build the most honest channel in the world. That's what I've achieved. Whether the trolls say so or not, I don't care. 98% of my live viewers certainly do. They're members, higher than any other channel in the world. So I know what commitment is and dedication is. However, that doesn't sell. Everybody wants an immediate answer. Dollar cost averaging. Well, if you are a passive investor and you do absolutely nothing and you just go to work every month and every week and get money and you don't know what the stock market's about and you simply put money in every single week, every single month, over time, you'll make money. So dollar cost averaging works. Not really. It's just the way the stock market works that you ended up being up over time because the stock market went up, not because you bought at the right time. So dollar cost averaging is simply what is done for passive investors who simply buy every week and every month. And there's absolutely nothing wrong with dollar cost averaging. If you don't want to look at the stock market, you couldn't care less, but you do want to see your portfolio go up over time. Why not? Why not dollar cost average and live a better life? Don't sit looking at the stock market. Go out in the countryside, go for a walk, have a nice life. Your money is going to go up over time. Not because it's a magic trick, because we, the investors, make it go up. The mechanics makes it go up. Doesn't go up by magic. It goes up because we make it go up. We print money, deflation, inflation, all these mechanics make the market go up. So if you buy over time, yes, you're going to be up, but don't then tell everybody dollar cost averaging works. It doesn't. It's rubbish. It's the stock market that works. So where does dollar cost averaging come from? Who started it? Who said it? It became really popular on YouTube for people like BitBoy. Well, we all know where BitBoy ended up, a complete flipping lunatic. He takes drugs, he cheats on his wife, he's a flipping lunatic. He says all sorts of stupid things. He got lucky buying Bitcoin at the beginning, got really famous on YouTube. Everyone thinks the guy's a legend. He's not. And then he started making up going to the moon and all this stuff. It's all rubbish. Now, even Warren Buffett talks about dollar cost averaging. People do. So it's not just idiots on YouTube. People talk about it, but they're talking about it from a point of view of being a passive investor, from someone who just wants to go to work and buy the stock market every week, every month. For you, it's going to work. It's not because it works, it's because the stock market goes up. So wherever you buy, you'll be up in time. However, is it the best strategy? Do I use it? No, it's rubbish. And let me tell you why it's rubbish. If we look at the stock market and we take the S&P 500, let's just say your dollar cost averaging on the S&P 500. Over history, the stock market goes up. Is it because businesses have become more valuable? Is it because they make more money? Not always. Coca-Cola sells the same amount of Coke pretty much every year to the same amount of people because there's the same amount of people on planet Earth. How does it make more money then? Because money is devalued over time. Just the same way as I talk about, would you rather buy a new modern house that all works, or would you rather buy the ancient castle of flipping, I don't know, some ancient temple that's 1,000,000 years old? That the ancient temple's worth billions, trillions, it's priceless, but it's just a pile of stones, provides no value. You'd much rather buy the new modern house where the taps work, the electric works, there's a roof on it. But it won't be anywhere near the price of the old castle from the millions of years ago because it's a historic, because money has been devalued. It's the land it stands upon that has become more valuable not because it's become more valuable, because money has been devalued over time. That's why the stock market goes up. That's why you should always invest rather than putting your money in the bank. Anyway, we're not going to talk about putting money in the bank versus investing on this video. We haven't got time for that. That's another video where I can prove to you it's stupid having your money sat in the bank. It should always be invested in an index fund. Anyway, so over time, the stock market goes up. So anyone who buys average over time is going to win. However, the best way is when you buy undervalue. No one ever talks about value. They talk about price. They go, oh, the stock's down today. Dollar cost average, it's down. Is the value down? Is the value up? I ain't got a clue. The price is down. Who cares about the price? I couldn't care less about the price. The price is simply the stock price on the day that people are prepared to pay for that stock. Does that tell me what it's worth? No. Imagine I had a car and I bought myself a brand new Ford Escape from the local Ford garage, $40,000. It leaves the lot. It becomes worth $30,000 through depreciation. That's just how it works. And I'm standing outside and I've gone back in time and I'm in the wild, wild west, right? Where everyone's shooting each other, right? The OK Corral and all that lot. And a load of people are shooting at me, trying to get the car off me. And they're all fighting over what my car's worth. They don't know what it's worth. They can't even drive. They don't even know what cars are. They didn't exist back then. But anyway, they're all on horses and car. But everyone starts shooting at me, and everyone gets aggressive and fights over this car for some reason. They don't even know what it is, but they'll fight over it, and the value will go up and down. It depends on how dangerous it is at the moment. Stood next to it, are you going to get your head blown off by Billy the Kid? I don't know. The point is, the price is the volatility of the market. It means nothing whatsoever. What I do isn't fun and exciting. I read balance sheets and I buy when the market is undervalued. No one pays attention to that. It's why we cover the earnings. So I don't care what the price is. I buy with conviction when it's oversold. Now then, how does buying the bottom of the market, and I'll prove to you how you can buy the bottom, compare to buying dollar cost average? Well, look at this. I've just shown you my portfolio. I've just shown you that I've gone from 5 grand to nearly 500,000. I've shown you this is my 1 year. Okay, so this year I've outperformed the S&P 500, I've outperformed Warren Buffett, and I've outperformed Robinhood Managed Professional Fund, which I have an account here just to see how I perform against. This is my Robinhood. Look, this is my Robinhood professional, paid for. The experts know better than everybody else, right? There's my Robinhood, and I just want to see how it performs. So that's why I've got $200 just sat in there. That's part of my Robinhood overall balance, but you can see that's just, what they're doing, and I'm outperforming that as well. So what I do is this. I own the S&P 500 for integrity of the show, but also it's the best asset to own in the current climate. I believe that. But it's also recognizable as the most responsible way so I'm providing the best information for you. I encourage everyone just to own the S&P 500, and I'm very proud that more and more people do, and it's why our members consistently win, which is great, okay? So over time, it goes up. Not because businesses keep making more money necessarily, hopefully they do, but it's because over time, history shows us that money is devalued. So what do? Just buy week 1, week 2, week 3, week 4, week 5, week 6. Sometimes you pay more, sometimes you pay less. What about everybody buying here? Well, they would have bought here, week 2, week 3, week 4, dollar cost average. Wasn't that great? Well, yeah, it was great, but it wasn't because of you being smart. It's you being passive and lazy, and just over time, the markets go up and down, but they'll end up overall, so whatever. But if you're going to beat, like I do, if you're going to beat the S&P, if you're going to beat Warren Buffett, you're going to beat the professionals, you need a better strategy than that. What do you think Warren Buffett sits around buying dollar cost averaging? He will encourage his passive investors to dollar cost average because, yeah, for you, monthly, weekly, absolutely fine. Or Roth IRA, yearly for me on the Roth IRA, you could do that. However, do you think he does that? Do you think Warren Buffett dollar cost averages? Do you think he watches YouTube channels going, it's going to the moon? Do you think so? Of course not. He just studies in the quiet of his office, the balance sheet, talks to the CEO and goes, when are you oversold? When is the stock price underperforming the value of the business? That's when I buy. So over here, we had Liberation Day. All right, down it went, down it went, down it went. Well, as it went down, I started to buy more and more and more, and I timed the market perfectly. I bought my biggest purchases right here at the bottom. Now, people in the chat will tell me, you can't time the market, it's impossible. Why are they saying that? Because they've watched a YouTuber tell you it's impossible to time the market. Well, it kind of is impossible, but you can actually make it so, and I'll show you how you do it. And I've done it many, many times live on the show. In fact, I did it a couple of days ago with a $39,000 trade. So I'll explain how you do it. So essentially, I know that because I've covered all the earnings, I know that 75% of the stock market, the top businesses have outperformed the S&P, have outperformed on earnings. Their earnings growth is good. Their forward projections is good. Their PE is good. CPI is good. PPI is good. GDP is good. Inflation's good. Forward growth, blah, blah, blah. All of that. Lots of numbers, lots of names, I appreciate, but this is what you have to do. Study, learn how the market works. Well, this is what I've done. I spent a lot of time learning it. I've sat here for 4 years, 12 hours a day. So I understand when the market is oversold, not the stock price, but the actual business. Now, what we had here, we had the S&P trading around 23, 24 times earnings. When it went down to here, did the businesses stop earning money? No. That's called macro conditions. That's when the market sold off due to, that was just due to Liberation Day. We had one back earlier, and that was back here, and that was the carry trade. I also bought that with mass as well. So at that point, the S&P went down to 17 times earnings. Well, it's not the lowest it's ever been, but it wouldn't be because right now we've got massive growth with AI. We've got the AI revolution, like the industrial revolution. We are in the midst of a massive explosion of stocks. And because of what's going on in the Middle East right now, tech solves problems more than ever. and with things like Palantir, which gets involved in defense and taking away the nuclear threat means, and particularly the deals being done with Saudi Arabia, a lot of new businesses and AI and this kind of stuff is about to explode. The market is primed to explode. Trillions of dollars is on the sidelines waiting for the signal to buy. So when the S&P is 17 times earnings in the current conditions of PPI, CPI, GDP, inflation, everything else, it was a massive buy sign to me. Now, yes, we look at charts as well, but I don't use them to trade. I talk to the people that work there. I have many friends. I have Wall Street managers. I have CEOs that come on my show. I've got a CEO coming on the show this Thursday from WidePoint. I talk to CEOs live on the show. These are all members-only events. If you want to be a member, there is the link to becoming a member for all the CEO interviews that I do live on the show. It's in the chat. It'll be below for everybody watching later. I recognized that the S&P was oversold. So I bought with all my cash, all my bank, all my margin, and I refinanced. I got as much money as I could to buy the dip because I buy with Buffett. I don't dollar cost average because dollar cost average is the same amount of money every week, regardless of it being up or down. As I've proved, that works for passive investors. Rubbish for actual investors that study, who have their eye on the ball. It's rubbish. Don't do it. So what did I do? I bought more and more and more and more and more. Now, do I know where the bottom is? No. But did I buy the bottom? Yes. Did I buy the bottom with conviction with more shares than ever? Yes. Obviously I did. That's why the market has rallied so quickly in such a short period of time, because I made so much money so quickly. If I take you down to my S&P just this year, you can see I'm absolutely bloody bonkers. Look at it. $38,000. Booming, right? Absolutely wonderful. In fact, the stock market is rallying today, which is really, really nice. Let me go back to that one day. So there you go. I haven't sold anything. I'm fully invested. So how did I do that? Well, because I know the value of the business. So I buy more. If you buy the business here, now it's here and you don't buy it, what are you doing? Oh, I dollar cost average. Well, no, you're not. You're buying it up here, down here. You don't know what you're doing. You're just buying it periodically. That's not hard, is it? That's what everybody does. That's easy. Of course, you're going to be up over time, but you're not going to be up as much as me. And that doesn't matter. Quite honestly, if I wasn't running a YouTube show, I'd much rather be out walking around the fields of England, having a wonderful time, and just dollar cost averaging. So it is right for you. It's just not right for me because this is my job. I sit here to bring you the best information. So I get paid to sit here in the dark all day long. So I get the information to buy at the right time, right? So I do. So how do you time the market? Well, you can't because you don't know when the bottom is, but you just keep buying more and more on the way down. You always make sure that you've got enough money, whether it's cash, bank or margin. In my case, it's all margin because I'm fully invested. And I make sure I've always got more to buy the next round. Now, the market never goes straight down. It has little ripples. And when it has little ripples and bounces up, you can get some money back. Let me talk about that. So this is important. On the way down, you're buying more and more and more, and you're running out of money. You don't know where the bottom's coming, and you keep buying more as it goes down. Larger and larger purchases, bigger lots, because you want to get the most at the bottom. Now, eventually, you'll run out of money doing that. Obviously, you will. No one's got a bottom pit of money. I haven't. I only earn a certain amount on YouTube, and that's it. So I can't keep buying forever. Margin runs out eventually as well. So what I do is, when we start getting a ripple, I can take some of those stocks back, get a full refund for the price I paid, and then allow to buy more on the way down, thereby freeing up some capital and becoming more fluid and liquid again because I'm running out of cash. What this is called is tax lots, and I will demonstrate it for you, and I've done this many, many times on the show. If I go down here and I click trade and I click sell, let me go to this position here. Let me click sell. This is my S&P 500. And let me go to the top button. It says shares. I click on that. I go to sell to tax lots. Very few people even use this. They just go buy, sell. Now you can see these are all the shares that I have got. Every single one of my shares now is in the money. Every single one. Someone this morning said, oh, you're buying the top. You're an idiot. You don't know what you're doing. Well, he's wrong again. Because the most expensive stock I have bought is at the top, $549. As you can see, I'm making money from that as well. I'm making money from every single lot. I never lose, and you don't need to lose either. I make money on this is every single lot. And if I search from top to bottom, you will see. If I go cost, I'm clicking the cost button. There you go. You will see there's the cheapest stock I bought at 416. Way down from where we are today. $416. That's the lowest one, and I never sell those. They protect my portfolio. They make my margin strong. And then at the top, 549. I bought at the top. According to this person, I'm an idiot. You're buying the all-time high. Well, I'm not buying the all-time high. We're not quite there yet, but nevertheless, I'll let you have that, even though it's wrong. I haven't bought the all-time high, but who cares if I do buy the all-time high? What's important is I bought 99% of my shares at the all-time low, whatever that might be. All right, you get my point. So what you can do right now is you can use tax lots. You can designate the specific shares you want to sell. Don't just go buy, don't just go sell, because if you do, you lose every time. Every single time you will lose, because every single brokerage by default does a thing called FIFO, first in, first out. You will sell the shares you bought first, and the ones it will sell first, you probably bought at the bottom. Years ago, you'll pay massive amounts of tax. You will have to give 20% of that money to the government. I don't want to do that. That's rubbish. I want to keep my money for myself, and I want to be able to invest it. I don't want to give 20% of the profit to the tax man. I want to keep all the money so I can invest all the money. I don't ever sell for profit. Profit is something I don't care about. What's important is I accumulate more and more stock at lower and lower prices. So how do I get rid of the shares that I bought on the way to the bottom because I've got too much? Well, as it ripples up, because nothing goes straight down, things ripple up, you can start going into tax lots. So imagine we're on the way down now, and a couple of these shares have now gone back up again. All right, let's take the one at the top. In fact, let's take the one here at 50 shares. Let's take this one here. There we go, 50 shares. Let me just zoom in, make it clearer for you. There you go, right. So I bought on the 20th of June, when apparently I wasn't buying, well, I was. I bought 50 shares. I'd taken a higher position. And in fact, this was an actual tax lot. If you watch my live show on Friday, you'd see me do this live. I actually had some shares here that were too much. I bought at the very, very top. Not literally, we've been higher 6 months ago, but we were up here and they were expensive. And I knew the market was going to go down because we had a rally because of Waller announced that we're going to get rate cuts in July. So the market went whoop, just to go back down again. So that was a tax lot. As it rose up, I sold the ones right at the top. I got my money back. I got my money back without taking any profit, without any loss. So no money goes to the tax man, and I don't lose any money because I knew it'd go straight back down again. So I did. I sold about 50 shares, whatever it was, about 40 grand, something like that. And I sold it for no loss, no profit. Nice. Thank you very much. And then when it went back down, I bought it back. And that's the 50 there. That's not dollar cost averaging, is it? That's not dollar cost averaging. That is buying at a lower price, manually using my brain to work that out, not just randomly buying every week at any price, whether it's up or down. Rubbish. Dollar cost averaging is rubbish, but it's okay for most people who don't want to spend all day like me looking at it, but I do, all right? I like numbers. This is my job. So that's what I did. Now imagine now that the markets have rallied. They have, and I've got too much exposure in this stock, or I've used too much margin. I bought the bottom. I bought these lovely shares all the way down here. Look, 530, 516. Look, 400. I got all these shares. I got all the shares I need to get me to $1 million because that's my target. We all need a target. I have $1 million. I've got enough shares to get to $1 million. In fact, folks, I have more like enough shares to get to 2 million by the end of the decade. So I've exceeded my goal You have to have a goal. You have to have a target. Otherwise, you have nothing at all. So I want to take some of this back. So I want to reduce my exposure. I've got too much exposure. I've got too much margin, I'm afraid. I'm thinking the markets are going to go down next week, the yen carry trade. So I'm going to sell those 50 shares. Now, if I sell those 50 shares, I will show you exactly what they're worth and how little tax I will pay on all of that money. Let me make it clearer. There you go. If you look at the bottom of the screen, right at the bottom down there, by selling 50 shares of the S&P, that is 27,552. 27 grand. I get back nearly 30 grand. I can massively reduce margin. I might want to buy a house, a new car, whatever it might be. I've got liquidity put back into my portfolio and I can sell. And all I will pay is $92 or 93 now, as you can see, in tax. Pretty good, right? That's all I'm going to pay in tax. So I get all my money back. I actually make a tiny bit of a profit. So that's great. That'll become 32 trades, 32 wins. I win again. And I managed to buy at the bottom. Now I can do it again when it goes down again. Now, I think that shows you the power of tax lots, the power of managing your money. It's why I've done 31 trades, 31 wins. It's why my portfolio is beating Warren Buffett's Berkshire Hathaway over the year. It's why I'm beating Robinhood's managed funds. It's why I'm beating the S&P 500. Don't tell me you cannot beat the market. Don't tell me you cannot time the market. And don't tell me that cash is king, and don't tell me that dollar cost averaging is the way forward. All of that is rubbish. You can do and beat all of those things. I do it all the time. So there you go. Dollar cost averaging is useful for those that want to live a much better life than me. Spend it with the family, running around on the beach, having a wonderful time. Yep, absolutely. Every week, every month, dollar cost average. But be quite prepared to know that you're buying more at the top and you're buying more at the top than you ever bought at the bottom. That's a fact because the market goes up. So you're always buying more. Warren Buffett doesn't do that. Warren Buffett will sit out and wait. And when the market crashes, boom, he will buy all of it. And that's what I do. And if you buy too much, you use tax lots to trim it back because the market never goes straight down. There's ripples. You can take some money off the table, but you do it without paying taxes, without making losses. And that way you continually beat the market and you will outperform everybody. Now, none of this matters. None of this matters. What matters is health and happiness and having the money at the end of the day that you need. What I do is what I do. It's right for me because this is my job. I sit here every day helping people doing this because this is what I do. I love to do it. I don't run around with grandkids, don't run around with children on the beach. I'm not interested. I like doing this and helping people. For me, this is the best life choice. So I can sit here all day and make the best decisions. This is why people pay financial investors to do this for them. This is what financial investors do. And this is why they charge you a fee. Okay? You might want to go out and just live a life. And if you go out and live a life, you'll have a wonderful life. And yes, you'll make money by dollar cost averaging. But dollar cost averaging is not the best strategy. It's the strategy for the passive investor or the lazy investor. But I don't want it to be the strategy for the investor that thinks they're active, and they think it's the right thing to do because they've heard some guy on YouTube telling them. Why do people on YouTube tell you it's the best strategy? They tell you it's the best strategy because it's easy. It's easy to sell, go to the moon, get rich, dollar cost average. It takes a lot of time and effort to explain what I have done. What I have done, I'll get a few hundred people watch this video. Millions will watch some crypto flipping idiot with a baseball cap and a pair of sunglasses tell you that you can get rich in 5 minutes and all you got to do is dollar cost average. Because it's simple. It's Cartoon Network. It's nonsense. Strategy takes discipline, time and patience and lots of study and lots of reading. Well, if that's you, and I hope my audience is that person, then that's why I'm here. I'm here to help you recognize the macro dips, recognize the pumps, recognize when the stock market is oversold. And when it is, I buy with conviction. Know who you are, know what you want to do, know what your goals is, and stick to it. If your goal is to become the richest man in the world and you're prepared to gamble everything and just buy anything that seems sexy and trendy and fun, go and watch YouTube, some clown on YouTube telling you what to buy, and follow that person. If your goal is to simply go to work, earn some money, live a good life and get to the future just by the S&P 500 every week, every month, you'll achieve it. Don't ever sell, just keep buying over time and then eventually borrow against it. If, however, you're like me, you like to invest and you like numbers, you like algorithms, you like charts, I don't mean charts for stock trading, analytics, you like numbers, you like to see growth, you like to challenge yourself, well, that requires study, effort, work, discipline. If you're like me, join me on this channel and that's what we do for you live every day. There you go. Dollar cost averaging, rubbish. Passive investing, yes. For a real investor like me, real investor like you, no, there's a much, much better way. Click above my head for all the links down below in the description. I should post some videos. Later on, I'm going to put to you here the strategy of war, how to invest in war, the history, the facts, the numbers. Yep, all of history up here. And down here, I shall put you a video I made earlier, why there's no crash at the moment, why the stock market didn't crash, and why it might crash in a week or so's time. Be prepared for it. Be prepared for everything. Whatever happens to the stock market, I'm prepared for it. Until next time, as always, take care of yourselves and each other.